Hey everybody. So I get a lot of questions about how to deal with um, recording transactions at the gross method versus recording inventory purchase transactions at the net method. And so I just wanted to kind of work through an example of both side by side so that it would be a little easier to see and a little easier to understand. So let's just jump into it. So the first one says create journal entries for the following transactions. The company uses a perpetual inventory system and records inventory transactions using the gross method. So when we use a gross method, all it means is that we are going to assume that we are making these purchases at full price. We assume we're not taking the discount. That's what the gross method means. So our first purchase then to do the purchase the first transaction to do the purchase on January 10th, we purchased 1,000 units at $25 per unit. So our merchandise inventory will increase by 1,000 units times 25, which is 25,000. And then our accounts payable, money we owe to the company we're buying from, will also increase by 25,000. Our second journal entry on January 15th, we're going to make a return of 50 defective units and we're going to get a full credit. So we're going to get the full $25 back on 15 units. So when we do a return, it's as simple as like reducing the purchase. We're going to debit accounts payable. Let's see, 25 times 50, which should be $1,250. And we're going to credit merchandise inventory. So 1,250. Finally, on January 19th, when we pay for this and we're paying within the discount period, right? The terms were 2% discount if we paid within 10 days. And since the purchase was dated the 10th and we paid on the 19th, we're paying within that discount period. So we're going to get a discounted price. So when we go ahead and pay for it, the whole amount that we owe is going to have to come off of the accounts payable. How much do we owe? Well, we credited accounts payable 25,000 here and we debited it 1,250 here. So 25,000 minus 1,250 should be 23,750. So the amount of accounts payable that we're debiting is simply the balance of the accounts payable account. And since the account had a credit of 25,000 and a debit of 1,250, then it had a credit balance of 23,750. We're going to debit that when we make our payment here to show that we're completely paying off the amount owed to the supplier. Then we're going to record the amount of cash we pay. And the amount of cash we have to pay is the amount we owe minus the discount. So if I owe 23,750 and I only have a two, I mean, and I have a 2% discount, that means I only have to pay my supplier 98% of what I owe them, or 100% minus the 2% discount. So I'm just going to do the amount of the accounts payable times. If it was more comfortable for me, I could also do 2% times the amount I owe and then subtract that from the amount I owe. So I'm going to go ahead and pay 23,275 in cash. So in order to make my journal entry balance, I'm going to show my discount here of 475, but we don't record it as a discount. Instead, we record it as a decrease to merchandise inventory. And that's because merchandise inventory doesn't actually represent like the stuff sitting on the shelves. It represents the cost of the stuff sitting on the shelves. And so since I originally recorded my merchandise inventory as costing 25,000, and then I took off 1,250 from that for the amount of the return, and now I'm reducing another 475 from that for the amount of the discount. So that's how I do things using the gross method. I just go ahead and record my initial purchases and any returns at their full price, and then I show my discount in my final payment. And I do that by crediting the merchandise inventory. So if we took the same problem, but now we have a company that uses the net method rather than the gross method, what that means is we assume upfront that we are going to take the discount. So we record our transactions at the net amount, meaning the gross price minus any discount. So if we were to do that on this first transaction dated January 10th, we would have merchandise inventory and accounts payable. And we would go ahead and say 1,000 units times $25 per unit is $25,000. And then we're going to factor in that discount right off the bat. So since I can't do that in my head, I'm just going to do 25,000. I mean, I probably could if I thought about it, but so using the net method, what we're doing is assuming the discount up front. So we assume that we're going to take that discount. Then on January 15th, when I do the return of 50 units, I'm going to record that return again by, in essence, reversing a portion of the sale. But I'm going to even record the return at the discount. So if I have 25, let's see, 1,000, I'm sorry, 50 units, and I'm getting a full discount on them. So I would do 50 times their cost of $25, which is $1,250. But then I'm going to also do that less the discount. Why? Because I recorded the purchase at the discount. I also need to record any returns at the discount. So I would say that's 1,250. Whoops. Times 0.98, right? So that's a 2% discount or 98% of the full amount. Then that's bugging me. All right. Then on the 19th, when I go ahead and pay for it, I've already recorded everything at the discount. So I'm going to go ahead and I'm going to record the accounts payable, which is going to be, we had a credit balance of 24,500, and then we debited the account 1225, or 12,225. So again, so I don't have to do the math in my head, I'll let Excel do the work for me. So that's the balance of our accounts payable, the credit balance, and we're going to debit it to show that we're paying off that accounts payable. The amount of cash we're going to pay is simply, and we're all good. So what's different about this is with the gross method, we go full price, and then in that last transaction, we go ahead and record our discount, and the discount gets recorded as a credit to our merchandise inventory or a decrease in the cost of the inventory. With the net method, we start off with the discount, we take any returns at the discount, and then if we're paying within the discounted period, our accounts payable will match up with the discounted amount. I hope that makes sense. We would only have to change this last entry if we ended up not paying within the discount period, because then we would have to factor it back to full price with the net method. So just recognize the main difference is with the gross method, we assume no discount. And then if we pay within the discount period, we calculate that discount. With the net method, we assume a discount up front. So I hope that helps and makes some sense. And I hope you have a great day. And as always, like or comment or subscribe if it's useful to you. That helps other people find my videos.